Tessa Tam from our affiliate in Shanghai. Well, China Telecom may have pounced on the market's two-day rally to place its shares in Hong Kong's biggest share sale this year. The placement is still, though, 30% less than what was originally planned. The plunging markets and fears over Beijing's efforts to cool the economy have somewhat dulled the enthusiasm with the Chinese IPOs. Some fund managers believe the party is over for this year. Let's introduce our guest now. He is Philip Chan, joining us now from Hong Kong. Philip, investors may not like the slide in stock prices, but I wonder if Beijing is quite comfortable with it, given that they felt there were bubbles building in certain sectors of the economy.
Yeah, I think they still will go for IPOs. It just depends on the sector, the valuation, and the quality of the company. So I think that you're right that valuations and interest in IPOs has come down quite significantly in the last few months. But IPOs and placements will still go ahead. It's just that the expectations for them in terms of how much money they can raise and the valuations that the companies can achieve are just going to have to be adjusted down quite substantially.
If you compare the current valuations, the PEs of some of these Chinese stocks to some of their global peers, how do they look, cheap or dear?
On the most part, they still probably trading at a little bit of a discount, if not at on par with some of the global peers. So. There was at one stage, at late last year and going into the new year that they were trading at, obviously, maybe at premium, bigger premiums to the global peers. So I think that adjustment has been healthy, and maybe we haven't reached the bottom yet, but I think the rate of decline that we're seeing as of now going forward is probably going to be less.
Philip, do you think that the market might be overreacting to Beijing's cool-down measures? After all, most analysts that we've spoken to don't believe there will be a hard landing in China. Could this potentially be a buying opportunity? Just recall last year how all Chinese IPOs were red hot on the market.
Yeah, it's not that. No, I wouldn't say it's a buying opportunity per se across the market. Again, you've just got to be selective. Yes, there may have been some overreaction to this, the cooling off in the economy. However, valuations and expectations were too high at the end of last year, going into the beginning of this year. So those expectations had to come down. Growth rates in China are still going to be quite good, generally, but they're going to be at much lower or slower rates than last year.
All right, we'll leave it there for today. Philip, thank you very much. We appreciate your comments today. Philip Chan, the research director at Shenwan Securities. Up next on the show, Taiwan's President Chen Shui-bian pledges to establish stability with the mainland in his inaugural